Hello, I'm Mario Toneguzzi, managing editor of Canada's Entrepreneur. Joining me today is Todd Hirsch, an economist, speaker, and author. Thanks for joining us today, Todd, on Economics for Everyone.
Great to be here, Mario.
All right, let's talk about interest rates. That it's always in the news, and it was in the news yesterday. The Bank of Canada holding its interest rates. Can you
Yeah.
explain it for the common Joe and Josephine like myself? What does it
Yeah.
mean, when the Bank of Canada is doing things with interest rates? Just explain that for us.
Sure. Well, the Bank of Canada, they are responsible for what we call the money supply and the cost of borrowing. And adjusting the interest rate is their primary way of making adjustments to how much money is in the economy and specifically the cost of borrowing for consumers. So if the economy is heating up and inflation is taking off, the Bank of Canada will make the cost of borrowing a little more expensive by raising interest rates. Conversely, if the economy is sluggish, if it's cooling off, if we're headed to a recession, they'll lower interest rates to make borrowing less expensive and to encourage borrowing and spending.
Now, understand the lowering of interest rates. So what I guess I don't understand as a common person is the flip side, the raising of interest rates. Why do you want to cool things off?
Well, sometimes, not currently, but sometimes you do see an economy that is overheated. You see inflation taking off, you see wages rising, you might see the unemployment rate very, very low. And the danger is that inflation starts to rise and you get into an inflationary spiral where wages are rising, inflation rises even more, wages rise to chase that inflation, and things get out of control. Some of the listeners might remember the early 1980s when interest rates were above, or interest rates were very, very high, but inflation was also in the double digits. So we're not in that situation now, but we do see from time to time when the Bank of Canada raises interest rates as a way of cooling off spending and cooling the economy.
Okay, now yesterday, as I mentioned, the Bank of Canada basically held steady on the rates. Ton, give me your take on that, on why they didn't make any movement there.
Yeah, this is a fascinating time for monetary policy and central banks. And I used to work at the Bank of Canada, and I would love to be a fly on the wall right now with the decision makers at the bank because we are in this extraordinarily unusual situation in Canada. We have a cooling economy. So normally the Bank of Canada would continue to lower interest rates. They lowered them 7 times up until yesterday.
Wow.
But at the same time, we have this tariff threat, which is pulling the economy and inflation sort of in two different directions. The threat of the tariffs is cooling the economy, but the retaliatory tariffs that Canada could impose on the United States would threaten to raise inflation. So there's a push and pull on inflation, and this is leaving the Bank of Canada in a really bad spot. I think what they decided to do yesterday was just hold rates steady at 2.75. The first time they haven't moved interest rates in 7 meetings of the Bank of Canada. And markets were a bit split. And I have to confess, I was one of those that thought the Bank of Canada would cut yesterday. They decided to hold steady. And I think the reason for that is not that they think the economy is, necessarily taking off, but I think they want to give themselves a bit more cushion in that interest rate level. If in fact we do see in end of June, if these tariffs, the tariff threat from the United States comes back into play, and if we see these broad-based tariffs imposed, I think the Bank of Canada just wants some nice interest rate cushion that they can use to start cutting more aggressively in later in the spring or in the summer if we need to.
Hmm. So, from a consumer point of view, how much of an impact does it really have when those interest rates are raised? Do consumers go whoa, whoa, and then back off from buying?
Well, they can. So the Bank of Canada, that overnight interest rate that we're talking about, that 2.75, it's what we call a trend setting rate. It doesn't dictate what mortgages need to be, but it sort of sets the trend for all interest rates and borrowing costs across the country. So it will eventually trickle into if they're raising it, it'll trickle into higher mortgage rates for consumers, but probably not instantly. The mortgage rate that are posted by the banks are influenced by the Bank of Canada, but not dictated. So it's not always a one-to-one movement in what the Bank of Canada does. However, what the Bank of Canada does and says signals very clearly to consumers the direction in which interest rates are likely headed. And people will respond to that, especially if you're looking at, a 25 basis point increase or decrease. For the average consumer, that's a pretty big chunk in your mortgage and your mortgage payment every month.
Yeah, excellent. Now, Todd, I don't know if you can answer this or not, but when we look at interest rate policy currently in Canada, how does it compare to what's happening in the US or even in European countries?
Well, those central banks are kind of moving in a different direction. And it's not always true that the Bank of Canada follows what the US Federal Reserve is doing. Some people have this notion that the Bank of Canada just repeats what the Fed is doing. That's not always the case. And it's certainly not the case now. Up until this tariff talk really started to change the mood in the United States. So last year in 2024, the US Federal Reserve was not cutting interest rates, not like we were here in Canada, because the US economy was still kind of red hot, whereas Canada was cooling.
Yeah.
So we did see the Federal Reserve holding rates. We saw the Bank of Canada cutting rates. Now the Bank of Canada is holding steady while Europe is cutting rates because their economy is also being threatened by tariff talk, and also some of the geopolitical tensions related to what's happening, continuing to happen in Ukraine and Russia.
Hmm. Interesting. Yeah. Well, thanks so much, Todd, for joining us today.
Always a pleasure to be here, Mario. Thanks for having me.
All right, that was Todd Hirsch, who is an economist, speaker, and author. Based in Calgary. I'm Mario Toneguzzi, managing editor of Canada's Entrepreneur. Thanks for joining us today.